CNBC and the National Retail Federation out with the latest retail monitor. Steve Leisman joins us right now with those details. Good morning, Steve.
Morning, Becky. Consumer spending bounced back in October after a sharp fall in September, with the gains in the CNBC NRF Retail Monitor across most sectors adding up to a good and a strong start for retail in the fourth quarter. Here's the data. The Retail Monitor, powered by actual credit card spending data from Affinity Solutions, shows retail ex auto and gas up 0.6 compared with a 0.7% decline in September. The year-over-year rate, though, did edge down to 5% from 5.4. We take out restaurants as well to get core retail. That rose 0.6, also up from a 0.5% decline. The year-over-year rate edging down to 4.9 from 5.7%. The monitor has been far more volatile this year. You can see that the data comes amid declining measures of consumer sentiment, inflation still high for goods, and tariffs that have prompted front-running by shoppers. So maybe that's part of the up and the down we have there. The alt data we're looking at, like the monitor, has taken on added importance amid this shutdown that's kept government data from being published, maybe coming out soon. Here are the sector breakdown. Most sectors were up. Digital products leading the way up 2%, clothing and accessories 1.4%. Restaurants doing well, as did beverage. Health and personal care did well as also, but building and garden supplies down 0.8%. That was one of just 3 of the 12 negative sectors, including gas station sales. NRF economists note recent economic data has been mixed, yet consumer spending remains solid, supported by wage growth outpacing inflation, historically low unemployment, and wealth effects from the strong stock market valuations. The economists were encouraged by October numbers for the holiday season, but I looked at it. October gains have only a loose relationship with November and December. Sure, it's a good start. Critical questions in retail right now. How are goods inflation, tariffs, and initial signs of a cooling job market? How will they affect holiday shopping? Those factors did not seem to hold back consumers in October, Becky.
Hey, Steve, if the shutdown actually ends, let's say, towards the end of this week, which is probably the fastest they could possibly do it if they come back to work, how quickly would we then get the data, and how out of date would it be as we get it?
So we think we were pretty sure they have the September jobs data and other data from September, remember, because the shutdown began October 1. So they could probably release the jobs data within days. That's the expectation or the thinking. And maybe even the CPI and some of the retail data could come out as well. October could be a big black hole. I talked to Erica Groshin, the former commissioner of BLS, and she said that during the shutdown, if you wanted to, as a business, to fill out the form and tell the BLS how many jobs you had, you couldn't do it because the computer system is also shut down. We don't know if they can gather the October data. I guess it's going to be and remain a big black hole there. But we are in a point right now where they could get the November data and have a pretty regular schedule for at least doing the jobs report for November.